I'm
What do you,
Emerald. I'll,
Emerald? Okay.
yeah, Sandra's our president.
Okay.
All right, it's starting to load. Should be in a second. Come in here and make sure that we're recording. All right, I think that we are on. All right, so good evening, everyone. Thank you so much for joining us this evening. We want to welcome you on behalf of Avanse Ansanm and our president, Sandra Dennis. We want to welcome you tonight and thank you for taking the time out to join us in our tax talk. Now, just to remind you about who Avanse Ansanm is, for those that might actually be brand new to the platform. Actually, I'm going to pause a second because I want to give the opportunity for our friends and board members and myself to actually share the live. So if you guys are going to take a second to make sure that we are giving our friends the opportunity to actually share our live. Okay, we are live. Give me a sec. I want to make sure that on my own personal page that I'm also giving our friends the opportunity to find us. All right, perfect. Now that that's done, to just remind you of who Avanse Ansanm is, that we are, that our mission is to engage and connect with those in the Haitian community. It's to share with both our own demographic as far as young millennials and those that are a little, maybe a little more than millennials, which I am a proud member of, and to advance all things Haitian. We want to advance all things, whether it's our culture, whether it's our financial prowess. We want to advance all things Haitian in our community. And so we come together as a group and as a board, and we're hoping this evening that the information that we're bringing to you will also serve in that purpose of advancing all things Haitian. So we search high and low to not just bring you a professional tonight to share tax tips and to share fresh information with you, but we successfully found a professional Haitian CPA that is climbing, that is really just sharing a lot of prolific information. When we're done with this, we'll make sure to share some of his social media handles to make sure that you're following him. I started following him, and every day he's just sharing phenomenal information. So we are always super excited to actually find young Haitian professionals that are doing the thing that all of our parents sacrificed for, all the sacrifices that were made for those that came before us. I love to see us actually living up to it. So tonight, I want to bring to you Michel Valbrun.
You got it.
I got it right. I hit it right.
You hit it like I said, you probably say it better than I can.
I love it. I love it. So Michel is a CPA. And what that is that he is someone who studied accounting and has dedicated his professional life to the work of accounting. So Michel, I want to give the opportunity for you to introduce yourself. Tell us a little bit about you. Tell our community a little bit. You're from South Florida, from what I gleaned from your social media also. So if you can tell us just a little bit about you, both personally and professionally.
Yeah, thanks so much for having me on. So as she mentioned, my name is Michel Valbrun. I am a certified public accountant, tax strategist, award-winning author, originally from South Florida, currently reside and live in Atlanta, Georgia. And yeah, just like many of you all, my parents came from Haiti really to have us live the American dream. And through that experience, they were actually entrepreneurs, and they actually were doing work in Little Haiti as well, coincidentally. So, through that, I was able to see some entrepreneur and learn a little bit about business through that. But for me, I had to do a lot of learning and kind of self-education as well, because there's just a lot of things that they didn't really know as it related to finances and money in the United States. So I went to the University of Florida, got my undergraduate degree in accounting, got a master's from that school as well, went on to become a certified public accountant and worked at one of the largest accounting firms in the country. But then really for me, what I wanted to do was really dive in and hone in on small businesses. What my experience working for these large companies is that, we were working for big corporations, but, didn't really spend the time working for small businesses. And for me, I was really passionate about helping small businesses, and that's kind of where we're at today. So helping small businesses save $10,000 to $100,000 in taxes legally and ethically.
See, those are the kind of numbers we're talking about. $100,000. And he ended that. And I want to make sure that we caught that. He said legally and ethically.
Yeah,
There,
that's super key.
yes, because there's help available in the community, but can we summit the bar of legally and ethically? So I absolutely love that that's a part of what your model is making sure that, hey, the benefits are out there. People hear that former leaders pay chump change in taxes, and they're like, how do I do that? And there are professionals out here like Michel who are here to give us as much information as possible to make sure that we're seeing our benefits also. So I'm hoping that we glean some tips off of you tonight, Michel. So tell me a little bit.
I'm here. Yeah, that's what I'm here for.
I appreciate it. Tell me a little. So what I want to start with individuals and personal. We're going to get to business. I love that your focus is small business. A lot of the people in our community start off not necessarily entrepreneurs. Some people don't realize that they're entrepreneurs. We'll get to that too. On the personal side, a lot of things happened last year with the pandemic. There are a lot of people were dealing with unemployment. People were dealing with just various things that came as a result of the pandemic. Can you share with us some of the things that individuals may find different this year due to what 2020 was like as they're doing their taxes right now?
Yeah, 2020, as you mentioned, was a very unique year for everyone. And as you can imagine, with that, it also created some changes, not necessarily, well, it did create some changes in the tax code, but for individuals, there's probably going to be some new circumstances or new forms that you may encounter now with this upcoming tax season. So as you mentioned, so unemployment was a big thing. So if you've collected unemployment, that might be your first year that you have received unemployment. So you probably received what's called a 1099-G. That's going to be the tax form for unemployment. What a lot of people don't realize is that you do have to pay taxes on those. So that's just something to keep in mind. So that might be a little shocker for some folks. Also, one of the benefits of one of the things that they did with the stimulus, with the stimulus package and changes to the tax code is they actually allowed individuals to be able to contribute to their retirement account before they file taxes. So typically you would have to do that before the end of the year, December 31st, but now they're actually allowing you to go ahead and contribute some money to a 401k, these other retirement vehicles that allow you to take a pre-tax deduction, and that can save you some money. So they actually extended out up to April 15th.
How would that be helpful to someone? Let's say, young professional, under what circumstances would I want to think about doing that now in 2021?
Yeah, so really as it relates to a good example is the 401k. So one of the things that you could do is you can contribute up to 19,500 into a 401k account. So what that does is that actually decreases your taxable income. So let's say, for instance, you made $20,000, right? And you didn't contribute to a 401k account, then you would have to pay taxes on that 20,000. But when you have a deduction such as the pre-tax contribution of a 401k, let's say you maximize that and set 19,500, you only have $500 that you're not paying taxes on. So that could be a pretty big, significant tax savings for you if you were to go ahead and do that. So that's how that works.
So quick question, just because our demographic is varied, whether, there are professionals and there are semi-professionals. So so every once in a while, I'll ask you to break down terms that might seem common to us, but that might not necessarily be common to everyone. So when you say tax code, can you give us a layman's definition of what the tax code is?
Yeah, so when I say tax code, that is just related to the Internal Revenue Service, that is the IRS. So the tax code, when I say tax code, I just mean the rules and the regulations that the IRS has in order for you to be able to calculate how much taxes or how much taxes that you owe during the year. So yeah, every time I make reference to the tax code, I'm referring to the IRS and basically the rules and the laws that you have to abide by as a taxpayer, as a U.S. citizen, in order to make sure that you're in compliance with paying the right amount of taxes that you are required to pay every year.
Got it. Got it. Do you ever have to pay money on? So I have a question from our live. Do you ever have to pay taxes on the money that you contribute into your 401k?
You do have to you do have to pay taxes on that. So with the 401k, that's a pre-tax contribution, so that does reduce your taxable income within the year. But yeah, when you start pulling out money at your retirement age, whenever you decide to retire, then yeah, then that's when you're going to start paying taxes on that, on those distributions.
So a 401k is for us laymen's is what?
A 401k, that's actually, so that's just a retirement account. So basically, with that, a retirement account, this account, right? So it's a separate account that you're not allowed to touch it. You can't do anything with it until you retire. Then with that, that depending on the type of investments that you do within that account, so you can do what's called, you can invest in stocks, you can invest in bonds, you can invest in maybe in like some cash accounts. There's mutual funds that you can invest in. A popular mutual fund that you can invest in is what's called the S&P 500. So that's the Standards and Poor's 500. It's pretty much like the biggest 500 companies in the United States. So that one, historically speaking, has an average of between 8 to 10% of a return. So you go ahead, you contribute into that retirement account, that grows over, you know, over the period that you have been investing in. And then when it's time for you to retire, typically retirement age for most folks is 67, then you can go ahead and begin, once you start beginning pulling out that money, then that's when you have to start paying taxes on that.
So when you pull the money, so putting the money in, you're getting this deduction as far as paying less taxes because you're putting this money into a retirement account. But when you pull it out, when you're in your late 60s or whenever you pull it out at retirement age, then you actually pay taxes on it then.
Yes.
So it's not that you're paying no taxes, it's that we're delaying the taxes.
Yeah. So that, and yeah, and that with retirement, yeah, you're actually just delaying or deferring taxes.
Got it. Got it. Well,
Yeah.
that's really helpful to know because a lot of times, especially the demographic that we're talking about with our millennials, that when you're talking about people in their 30s, we haven't really sometimes started thinking about putting that money away because we're still young and virile and doing our thing. So we would see a benefit for it right now. So it's an incentive to save for retirement now.
Exactly. Yeah, that's what they're trying to do because they know that one of the, and this is another general concept with as it relates to taxes. So, you know, the government realized that if they start taxing things or not tax things, it incentivizes people to do different activities. So they know that, okay, we want people to invest and contribute to retirement, one, for their own betterment, you know, for their own, you know, to be able to create wealth and make money for themselves and their family, but they also know that those contributions are also investing into the companies in the United States, and it's, you know, helping the economy and everything. So what they
Mm.
do is they're incentivizing people to go ahead and contribute now, so you can reduce your taxes today, and then, you know, have to pay taxes again when you go ahead and retire.
Do I pay lower taxes when I retire than I would if I use that same money today? Like by the time I retire, will my taxes be less?
Yeah, so that's kind of the debate there, because when you should, the expectation is as you get older, your your income, well, not even say that. So chances are the tax rates are going to increase, right? Because that's just historically what they've been doing.
Mm.
Now with, you know, with these stimulus bills, they've been pushing out, you know, billions of dollars out there in the country. We're gonna have to pay for that. So it's not free money. It feels free, but someone's gonna pay for it. Joe Biden's already looking to make some significant changes to the tax code to be able to get some of that money. So, you know, chances are the taxes are going to increase by the time you retire. So the tax rates may be higher. Now, typically older individuals, they don't make as much because you have, you know, less ability to, you know, be able to do certain things. So maybe, you know, when you start pulling out that money, maybe right now in your 30s, 40s, or whatever, maybe you're making 100, $200,000 per year. Maybe when you start pulling out that money, you realize that you don't need that much to be able to pull out, so you may pull out less. But, you know, there's a chance that taxes are going to increase. So you may end up paying more money in taxes. So another strategy, what people do is there's also called like a Roth 401k. So ROTH, Roth,
ROTH.
that's, yep, that's an after-tax contribution to a retirement account. So it's basically you're taking money that you already pay taxes on, you put that into a retirement account, and then it can grow tax-free, and then you don't have to pay taxes when you start pulling out those just distributions. So
Do you get it? Do you get the same benefit though if you put it into that kind of account? Because I remember you said 19,000. If we put about
no,
19,000,
the benefit, you know,
no, go ahead.
right. So yeah, so no, well, yeah, what I was gonna say is, yeah, so with the Roth, yeah, you can go ahead and contribute the 19.5 and on that as one, then you get the tax-free growth on it.
Got it. So you can go ahead and
But you don't
contribute.
get the deduction like today. So it's not a deduction for you. It's pretty much a hedge, knowing that, you know, taxes are probably going to increase in the future. So you're just like, let me go ahead and just pay the taxes today, put the money in the account and let it grow.
Okay, got it. So one of the questions that I've gotten a lot from people, the stimulus payments that were sent out throughout the year in order to, you know, help people out. I get the question a lot. Will people have to pay taxes on that? Because people are getting their taxes done now, and they're being asked, "Did you get your stimulus money? How much did you get?"
Yeah, so that you shouldn't be getting taxed on that. That's just an advance in, you know, from the government. But like I said, they are probably going to find a way to get that money back. So
Find a way down the line to circle back around to it.
yeah.
Gotcha. Okay, so for individuals, because I want to make sure that because I want to get into some business stuff, but I want to make sure that those that are not in the entrepreneurial space, that we give them as much information as we can as they're going into their CPAs and into their tax professionals. What are some deductions or secrets? What's commonly missed? What do a tax preparer may commonly not take advantage of for the average individual? Are there a couple of things on your list?
Yeah, so as it relates to individuals, really the biggest savings is going to come from the retirement account. So contributing to like that 401k account is going to be helpful for you. Then also too, for individuals, you do have what are called itemized deductions. So itemized deductions is just pretty much a list of deductions that you're able to take. And every year, as a taxpayer, if you're a single, let's say for instance, you're a single filer, you do get what's called a standard deduction. That standard deduction for 2021 is 12,550, and I believe for 2020 it's 12,400 is the standard deduction. So you automatically get that standard deduction automatically. So that standard deduction is just the amount that's automatically reduces the money that you made for the year. But then you have the itemized deductions, which you can use. And if that number is higher than the standard deduction, then there's an opportunity for you to take an even bigger deduction. So on those itemized deductions, you have things such as gifts that you paid to charity. You have, you know, some expenses that you paid for the homes or taxes that you paid during the year. So property taxes, sales taxes, mortgage interest. You're able to deduct for some of that as well. Medical expenses is another big one as well. So you up to a certain amount that you're able to deduct. So, you know, with those, that because they've actually increased the amount that you can take for a standard deduction, it's a little bit harder to surpass that number, especially for an individual. But yeah, if you're able to have more, or if you're able to expense more than that 12,400 or whatever your standard deduction amount is, then that can give you a bigger incentive as well. And then you also have credits as well. So which is pretty, if you have children, you have the child credits that you're able to take advantage of, and some other credits as well. So
I know in our community, churches, there are a lot of churches in our community. So when you say charity, so after and I'm, chaque semaine or des semaines, whatever it happens to be, I'm making sure que moi mettre l'église là a portion of my tithe, my
Oh,
offering,
yeah.
whatever it happens to be. So does that count as part of what I can throw in there under my charity?
Yeah, so with the itemized deduction, yeah, you're able to contribute up to a certain amount. Well, actually, so historically speaking, you're only able to contribute up to a certain amount. But yeah, if it's a 501(c)(3) or what the government considers, recognized as a nonprofit organization, then yeah, you can you can be able to write that off. If again, those itemized deductions are more than the standard
Okay,
deduction.
so I want to translate that and make sure that we understand what he's saying. If they're 501c3, 501c3 means that they are registered avec gouvernement comme l'église, et puis comme l'église qui non-profit, right? So si wap marche like I pasteur tel, and pasteur tel has not done the paperwork pour yo considérer comme un non-profit, l'argent ça wap bay comme dîme, comme offrande, peut-être si ou ka itemize, si peut-être dans situation so te ka itemize, ou ka usually parce que c'est un groupe qui, une organisation qui register pour na bay l'argent. So, make sure that, because I know nous avons pile l'église dans la communauté. We from Catholics to Adventists, from A to Z, nous connaissons nous avons pile. So, nous voulons faire ça. Nous connaissons nous pas bay l'église là pour nous te prendre comme un deduction, mais les nous fidèles, le monde ban nous un bénéfice parce que nous fidèles avec Dieu pas nous, mais fait nous faire si c'est dans l'église qui register, qui gagne non-profit, les 501c3 qui montre que le gouvernement reconnaît. So that's one of the things that we have to make sure that things are straight in order to reap those benefits that we might be able to get depending on our situation.
Absolutely. You just took me back with all that Creole. I feel like I'm at my
I'll bring
mom's
you
house.
back. The non-profit wasn't that long ago for you.
No.
So, okay, so I love that. So let's move on to, if you have any specific questions, guys, about personal tax returns, whether it happens to be earned income credit stuff, whether taxable on your unemployment, what else were some of the things pandemic-wise that, there's one thing that I saw pandemic-wise that you may want to tell your tax people about, maybe, but not you, I'm talking to the audience, not you, the CPA.
Yeah.
But that we may want to ask, and I'll ask you about it. The earned income credit, I know you do mostly business and we're going there. The earned income credit, I read somewhere that if you're within the limits and you are getting the earned income credit, which is a credit they give for people that have at a certain income that have dependents, right? For everyone else.
Yeah.
I read somewhere that for the pandemic specifically, whichever year you would have gotten a better portion of it, you can use either 2019 or 2020 if one was better than the other. So if your income decreased in 20 and you ended up getting more of that credit, that the IRS is allowing you to use the numbers from whichever year greater benefits you. Have you heard that?
I don't remember that specifically, but yeah, that's good. If that's
Yeah.
yeah.
I saw it and then I read it somewhere, and then I followed up and read it somewhere else that makes sure. That's why it's good, guys, pour nous faire taxe nous avec un monde nous faire confiance, avec un monde continually, avec un monde nous continuer. C'est pas chaque année n'a changer pour nous qui côté on a ban nous plus l'argent. That it really is good to have a professional that you go with from year to year, because that professional would know what your numbers looked like last year, so that they can compare them and be able to tell. Because when you're going from person to person to see who's going to give you a little bit more, you might actually miss out on some things because information may not carry over to the new place.
Yep,
Right?
absolutely. And a lot of the tax softwares, they just automatically calculate that for you. So yeah, that's good.
Yeah, that's me off of my soapbox. So I'm down. I'm down now. I'm down off the soapbox now. So So tell me a little bit about, your parents were entrepreneurs, and we've had this conversation a couple of times on this platform. So I'm always excited to hear about Haitian professionals who came from entrepreneurial parents, whether or not the entrepreneurial activities were whether it's lawn maintenance or they themselves had a brick and mortar business. There are a lot of entrepreneurs in our community, whether or not they think that they're entrepreneurs, they're just trying to feed the family, but they're entrepreneurs. So your work with small businesses, tell me a little bit about what brought you into that. And then I want to pivot into some of the tax benefits that you have found that small businesses simply, we don't even know to ask about.
Yeah, that's a great question. So with me, so one of the things that happened was, so when I was in school, I actually I used to do volunteer work. So I volunteered for an organization called VITA, and it was pretty much the organization is just a volunteer income tax prep service for lower income individuals. So if you made less than $50,000, you can go ahead and get your taxes done for free, complimentary. So we'll go ahead and do taxes for individuals and also some small businesses as well. So depending on the income threshold of that business, we'd also take on some business clients as well. And I was working on one tax return, working with the business client. It was a couple. And once I completed the tax return, the husband turned to me and asked me, how do I save money in the future? Like, how do I reduce how much money I pay in taxes? And, I literally, I didn't have a good answer for him. I froze, and I had to, it was really like a turning point for me. For me, I had to realize and understand that I didn't really understand small business taxes at all, because really the education system, based on my experience, is that a lot of them teach you how to work in corporate America, how to work those, that 9 to 5, but not necessarily focus on small business taxes and teaching you the different incentives and different things that are available for small business owners. So for me, one of the things I did is I invested, hundreds of thousands of dollars investing myself, working with the top tax professionals in the country, and then really learning, what I could about, small business taxes. And that's kind of been my focus. And one of the reasons why it's been my focus, well, it's twofold. So one, the the tax code favors small business owners and investors. And the reason why that is because in the government's eyes, they believe that small businesses help boost the economy, that you hire people, you create products, you create service, and it has a bigger impact according to the government per se than an individual. So they give you a lot of incentives and really push you in order to become an entrepreneur or an investor. And when I say investor, investing in the stock market or investing in real estate, or different kinds of assets that are available to you. So that's what got me excited about it, because before, my toolbox was kind of limited with the individuals, but then with businesses it just significantly expanded, and just really just a lot. And I'm still continuing to learn a lot, because things change, they keep adding incentives, they're removing things. So it's a constant, just being on top of and just really learning the stuff. So
I love it. I love it that we actually favor small businesses. That's exciting to know. I think we take that for granted sometimes. I don't think I hear that as often. Small, because a lot of times um, corporate welfare is where a lot of, from our perspective, is where a lot of the money is going. By corporate welfare, for those of us watching, I mean, we hear about these big corporations that don't pay taxes, which in essence, if your tax bill is reduced, that's more money that you can keep in your pocket. Technically, they talk about welfare down here, but that's welfare. That's government money that people with a lot of money are allowed to keep or to get back. So that's the kind of it's interesting to hear that our country, our laws actually favor small business. In what ways have you, so as a small business, how do I access that? Because it sounds like relatively new information, because as you're starting your small business, it's hard to get money to actually get started. You don't think that there are these benefits for you out there. How do I use the tax code to actually, as a jumping board for my entrepreneurial ventures?
yeah, so really, as an entrepreneur, and when we say entrepreneur, business owner, according to the IRS, it's really if you're in the pursuit of making profit, or if you are an independent contractor. So you don't have to necessarily think that you need this big corporation, you don't necessarily need to have employees or all these other things that people feel like they need in order to be considered a business. Like, you could literally create a business. You could literally be an entrepreneur today as a what's called a sole proprietorship with your social security number. That's not ideal. You want to go ahead and formalize and probably get what's called a limited liability company, an LLC, or a corporation, something to give you some legal protection. But there's not a lot of requirements in order for you to be what's considered entrepreneur business owner. And then the benefits of doing that is that you're able to get several deductions from that. So as it relates to business deductions, there's actually 4 requirements that the IRS has in order for you to be able to reduce how much money you pay in taxes. And these are actually permanent.
I'm going to pause you for a quick sec, because I've heard you say this before. And this is the point where if you're thinking about being entrepreneurial, you want to take notes. You want to stop and actually take notes on these 4 points, because I've actually watched a couple of videos and heard you say this before. Please continue.
Yes, thank you, thank you. That's a good pause. Yes, so it's basically if you're taking notes on your notepad, you want to make sure that you write down free on the left side of the paper. So free, it's an acronym, so I call it tax-free deductions. And the first part of that free is going to be needs for business. So it needs to be for your trade, business, or profession. That is what you are required to do in order to be able to take advantage and be able to write things off. So that's the first part of that free. The next part of that is going to be R, which is it needs to be considered regular for your business. The IRS calls that ordinary. So for instance, one of my friends, she has an ice cream shop. So what's considered a regular deduction or ordinary deduction for her business is supplies for her ice cream shop. So ice cream cones, spoons, napkins, cups, those kind of things are considered regular for that business. It makes sense for that type of industry and that type of business. The third part of that is going to be E, essential. So what's going to be essential for that business to operate? So one of the things that's going to be essential is going to be having employees. It's going to be having a building. It's going to be having air conditioning and cleaning supplies and all these things that are essential in order for the business to operate effectively. And last but not least, with that free acronym is going to be economical. So it needs to be seen as economical. So it can't be what's considered extravagant or lavish under the circumstances. And all that really means is, you want to make sure that your expenses make sense with how much revenue you have. So if let's say you only made $50,000 or $10,000 in the business, but then you're spending $5,000 on a meal, which is something that you could deduct from your business, that might be seen extravagant or lavish under the circumstances of your business because you didn't generate that much revenue for your business.
I want to go back to something that you said maybe a few clicks back, that for it to be considered a business, for the government the IRS considers the definition for it to be considered a business is that you have to be in pursuit of profit. Can you elaborate a little bit on that for me? And the reason that I asked that, one of the experiences that I've had, and I realized that especially I can speak about our community because this is where I am. So I'm speaking specifically about the community, but a lot of times people have businesses, but want to pay no taxes. Like, I don't want to, and of course, understandably, you want to keep as much money as you make, but a lot of times you'll find that if you're looking at the Schedule C, which is the form when you're a sole proprietor, it's the form where you actually put in your business expenses, or you're looking at the actual business books or the business taxes, and people are saying, I lost money every year for 15 years.
Yeah.
So talk a little bit for us on what it means when you say pursuit of profits.
Yeah. So pursuit of profit just means that you are actually making an effort to generate a profit from your business. So one of the things that happens is, and it's been actually a very popular topic on the internet, turning your lifestyle into a write-off. So what happens is people turn their hobbies or maybe something that they do, in their personal life and call that a business. And the IRS knows that people want to do that because what happens is they understand that business owners and entrepreneurs could be able to deduct several deductions and be able to write a lot of things off. So one of the rules that they put in place is what's called the hobby loss rule. with the hobby loss rule is basically if you show you can't show losses for more than 3 out of the 5 years that you're operating a business. So if you've been a business for 3 years, coming up on that fourth year, if you can, ideally it'll be best if you could show a profit. If you don't show a profit, it just opens up the opportunity for you to be audited. And if you were to get audited, and audited just means like the IRS is coming back and looking at your tax returns and saying, no, this is not right. And one of the things that they may do is disallow or be able to reverse some of the deductions that you took in the past, because they're just like, this is not really a business. You're just creating something just so you can take losses and just so you can save money on taxes. So that's one of the things that you need to keep in mind, trying to make sure that you're profitable. And also, if you continue to show loss, what's going to happen is it's going to make it more difficult for you to get funding for your business. So, a lot of loan programs, they want to see that your business is actually profitable in order for you to be able to give you money, because you wouldn't give someone money who's always losing money every year, right? So that's why it's important for you to show some kind of profitability and work
So
towards that.
while as a small business specialist, like you specialize in small business, and we started this conversation by talking about trying to save people from 10 to 100,000, trying to save small businesses from 10 to $100,000. So you are definitely dedicated to keeping as much money in our pockets as possible. But what I hear you saying, if I'm understanding it correctly, is that as a business, you do need to show that you're making money. And if I'm showing that I'm making money, will I not be, I will be paying taxes on it, on the profit. After, it's great having all of the deductions in the business expenses, that's all great. But after that, what's left, I will be paying taxes on.
Yes.
Now, is it and this is probably a generic, but is it a bad thing to have to pay taxes?
It's not I wouldn't call it a bad thing, so basically at the end of the day, so if someone were to come tell you and promise you that you're not going to pay any taxes at all, that's probably someone that you need to stay away from. So you're going to pay taxes in some kind of form. So I always like to share with people, taxes are your single largest expense, because when you make money, you pay income tax. When you pay for something, you pay sales tax. When you purchase property, you pay property tax. When you sell the property for more than what you paid for, you pay capital gains tax. And then when you die, someone pays estate tax. So taxes are all over the place. You're going to get hit with tax. One of the things, or one of the hot topics, was that Donald Trump paid like $400 in taxes, but that was actually just,
750.
or yeah, 750. That's what it was. Whatever it was, right?
Something ridiculous.
Yeah, something
It's just
ridiculous, right?
ridiculous that I just want to get it right because it's ridiculous. But go
Yeah,
ahead.
yeah. So 750 was the number, the controversial number, but he actually did pay, I believe, over $2 or $3 million in payroll tax. So the 750 was just how much he underpaid in 750. So that's how much he was left to owe. But he was paying some form of taxes. Granted, his employees paid the other half of it. Granted, he probably should have paid more taxes somehow, some way, but he is someone, as you already know, who's willing to push the laws and see every loophole and everything that's available to him. And there's a lot of legitimate things that he did. He's more on the aggressive side of things, but again, if the tax code says that you could pay your children or pay employees through the business, then he's going to do so and take advantage of that. So
All right. So if I'm thinking about starting a business, we talked about entrepreneurship. If I'm thinking about starting a business, you talked earlier about being a sole proprietor or an LLC. What's the difference, especially on the tax side? What's the difference? Is there a difference in the tax side?
yes and no. So there's a couple of things. So as it relates to taxes and business structure, so they're actually two different things going on. So you have what's called legal entities and you have what are called tax entities. So a legal entity is registered with the state. That's what the state recognizes. And that is just pretty much identifies or classifies what your legal protection is, or if any legal protection exists. So that your legal entities are going to be your sole proprietorship, it's going to be your partnership, it's going to be your limited liability company, and it's going to be a corporation. So those are going to be your four legal entities. Then you have what are called tax entities, and this is how you're actually taxed. So the tax entities, you could be taxed as a sole proprietorship, you could be taxed as a partnership, you could be taxed as an S corp, and you could be taxed as a C corp, and you could be taxed as a partnership if I didn't already say that. So those are the ways that you could be taxed. So with the LLC, one of the benefits of the LLC is you can elect or choose how you want to be taxed. So the default setting for an LLC, if you're just one person, is going to be a limited or a single member LLC. If it's a person, it's going to be a multi-member LLC that's taxed as a partnership, or you can elect to be taxed as an S corp or a C corp, and those are the ways that you could be taxed. So yes, so as it relates to taxes, if you're an LLC, taxes sole proprietorship, as you mentioned, you're going to be using what's called a Schedule C to record your business income and expenses, to calculate how much you're paying in business tax. Or if you're just a sole proprietorship, you're going to do, again, the Schedule C as well.
So, so not to, like, I love this stuff. So in my mind, it's like click, 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 but not, and so not to overwhelm our people, the people who are not. So this is a great conversation. I would imagine this is a great conversation to have with whoever is preparing your taxes. Should you have this conversation before you pull the trigger on starting a business? For those that are professionals at what you do, like you're a great baker, you are a great, I don't know, I have a client who is a shoe designer, like phenomenally creative kind of person. But this side of it, maybe, you know, can I go ahead and start my business and start doing what I'm doing, and then I'll come back around and talk to you?
I'd say absolutely not. I think it's probably important to do it before you start making money, because what happens is, for most people, unfortunately, they end up overpaying in taxes. And I shared all the taxes before with you. So you have income tax, sales tax, capital gains tax, estate tax, all those kind of taxes. But what I believe the biggest tax of them all is ignorance tax. So when
I'm gonna write that one down.
ignorance tax is the biggest tax of them all. That's going to be your most costly tax. And when I say ignorance, I don't mean that in a rude or disrespectful way. Like, if you look up the word ignorance, it just means a lack of knowledge or information, right? So you don't know what you don't know. So what happens is, a lot of people, they get into business, they don't set themselves up in the right tax entity, and they end up overpaying in taxes by thousands of dollars. Or you may not be aware of the different taxes that you have to pay. If you have a product, if you're selling products, you have to pay sales tax. You may not be aware of that. If there's just other things that you don't know what you don't know. So it's always good to work with a tax professional before you get started, just to kind of give you like an overview and give you a roadmap of some of the things that you should expect in the upcoming years. And then also too, just so you have that peace of mind, and really take those things seriously. And it's also a deduction. So
yeah, so talk to your tax person before you make a choice, whether it's, as he's saying, whether it's thinking about going into business, or one of the ones that happen all of the time is you pull money, you prematurely at your prime 35-year-old age, pull money out of your retirement account. And then at the end of the year, you show up to the tax person and say, oh, this is what I did. I did this throughout this past year. It's really hard to play catch up after I made the decision. So if you're thinking about starting a business, or even if you're thinking about doing anything that has to do with your money, you want to talk to the attorney, especially if you're starting a business, but you also want to talk to your tax person on the front end, because it's real hard. It's much harder to save you after you've already done what you did.
mhm. Yeah, no, it's unfortunately, it's harder to reverse. It's more expensive. It's just it's definitely a lot easier to just go ahead and do it the right way the first time.
All right. Have a few questions just from the audience, just from the live. And I know that we are rounding the corner of our time with you. Where are we? We're at 7:45, give or take. We're rounding the corner of our time with you. And I just definitely want to make sure that our folks get their questions in, so I am not doing all of the rambling. One of the questions that came in, which I think is a great question, is especially you can share both business and personal thoughts. How do you avoid getting audited?
Yeah, that's a great question. So, audits are pretty much part of the game. I mean, sometimes there's what's called random audits, that happens, that's, usually like less than 5% of audits are random. The majority of audits are triggered by certain things that you do on your taxes or what you don't do. So one of the ways you can get audited, obviously, is if you don't pay your taxes. So, not paying taxes, skipping and all that kind of stuff is definitely going to trigger a letter from the IRS asking you to to give them some money. So that's number one. Another thing that happens is, really when it comes to audits, what they're looking at is whether people are or understating income, which means reporting lower income than they really made, or overstating expenses, meaning recording bigger expenses that they actually did. So one of the things that they're going to look at is, when you're filing your business returns or just any returns in general, they're going to look at and they're going to compare what people within your income threshold are deducting and writing off. So if you're making, $50,000, but then you have this huge, you said you donated $30,000 to the church, you know, that might trigger an audit. Not to say that you didn't do that, and not to say you're not allowed to do that, but it's just going to raise a red flag. So, you kind of just want to think about, okay, if I were on the other side of this, if I had to audit or figure out, which tax returns are doing things that they're not supposed to, what those things are going to be. Another thing is, like, if you're using round numbers on your tax return. So when I said round numbers, so like having zeros at the end of it, not to say that things don't cost $0, but when you add up your expenses, it's never like an even number. So if it's just the even number, like, okay, yeah, you're making this up. Yeah, there's no way.
You're not even being creative about it.
Yeah, you're not even being creative. At least put a 1, put a 3, something. If you're gonna try to estimate, which you shouldn't be doing anyways. But yeah, making sure that you're using actual numbers is going to help you a lot.
What should I do once I get a notice that I'm being audited? What do I do next once the letter's in my hand?
Yeah, definitely reach out to a tax professional, ideally a certified public accountant or a tax attorney, because a tax attorney or an enrolled agent, because those three individuals could represent you in front of the IRS and, kind of help manage and communicate with the auditors on your behalf.
So I'm your tax client and you prepared my small business return, and I get, because this is one of the things that happens often is, well, you did my tax return. Do I need to pay for these additional services if I get audited?
Well, technically speaking, as terrible as it sounds, you're responsible for your tax return. So
let me tell y'all what he just said, which is actually the government's position. This is very, very important. The government's position is your CPA, your tax preparer, your whoever may have hit the buttons and prepared the form. But once it's submitted, you sign that little form that said I can send it in, you signed at the bottom and you mailed it in. According to the IRS, you are responsible. Ça veut dire, nous te mettre retourner dit, mais c'est Michel qui te fait taxe là, par contre qui ça Michel te mette dans taxe là. I get or not, qui n'est pas ça Michel te mette dans taxe là, c'est ou même qui te bail Michel social ou te signé bali, taxe là c'est taxe pour lui. C'est ça qui est réellement important. Pour nous garder qui ça n'a pour nous garder pour nous au moins poser question c'est payer n'a payer moun pas seulement chercher qui moun ka fait taxe nous pour moins comme oh et tel fait taxe pour $50 $50 service is what you're gonna get. I'm not saying that there aren't good people in the community that that their rates might not be high, but a lot of times we're gonna get what we pay for because true professionals know what they're worth and they're going to charge for it. So whatever goes into our tax return is what Michelle just said. Once it's sent in, Amarel's responsible for whatever that tax return says, regardless of if Michelle was the one who used his fancy software to create the form.
Yeah, and unfortunately, I'll tell you up front, you're gonna have a hard time finding that person if you say you get audited, it'll be like, oh,
That's crazy.
Yeah, yeah,
That's crazy. What you gonna do?
yeah. How you gonna handle that? Good luck. I wouldn't, but I don't, I wouldn't do that, and that's why, that's why I always push the legal and ethical, and I try to be conservative with things as well. So, um, if it's an error, like if it's an error where I may have missed like a W-2, on the tax return, then I can obviously I can take responsibility for that. But but if it's something else, typically that tax preparer is not going to take responsibility for it. So yeah, definitely make sure you understand what's going on. Review it with them. Make sure they're doing a review with you at the end of it, and yeah.
All right. I'm going to go back to personal because this one actually came. There are two questions that actually came from those that are watching us live that I want to throw back at you. And one of them, we're going back to personal. And we have to address this because this happens too often in our community, and too often there are a lot of well-meaning people who do not realize that what they have been doing forever is not how things should be done. So I'll tell you guys, not Michelle, don't listen. I'll tell you guys who know me well, a terrible joke. Is that you ever hear our old Haitian men say, man, that's at church, everywhere, man, that's fucked up. That's fucked up. I heard people say fucked up forever, forever. And not until I was a grown adult was like, but wait, has Tonja Jacques been saying bitches this whole time? I did not know until way later that, oh, those were English words. So I say that to say this next question about the married filing jointly and married filing separately and head of household kind of dance that happens. I don't know, being that you do a lot of business, I don't know if you have experienced oh no, me and my husband, we file separately. And what they mean by what they file separately is I want to get my earned income credit. So I file over here and he files over there. Can you speak a little bit to what those things mean when the IRS says you file separately and when oftentimes we are saying, no, I file here and he files there?
Yeah, so what she's referring to is just your filing status. So, when you're filing your taxes, if you're married, you can file married filing jointly, you can do married filing separately, or you could do a head of household. Ideally, if you guys are still together, you want to either choose married filing jointly or married filing separately. Head of household is more for individuals who, may not be with their spouse anymore and they just have dependents. But yeah, it really depends on the situation. I mean, there's some very rare cases where married filing separately may save you more money in taxes. One of the disadvantages of it is you do get a lower standard deduction for married filing separately, and also you also get a lower deduction as well on the head of household. So married filing jointly gives you the most tax benefits usually, and then if you do married filing separately, you do lose some of those benefits, some of those tax credits, and then but it is important to try to be consistent. So you don't want to be jumping 1 year ahead of household, next year you guys are married filing jointly, then next married filing separately. Like, that can bring, that could potentially raise a red flag for an audit. So
yeah. So head of household means that you have dependents and you are not with your spouse.
Essentially,
or you don't have a spouse.
Yeah, that's when you would usually want to use that.
Okay. And one more question from
And then
the,
the spouse or the mother or father of that child will have to file single.
gotcha.
Mhm.
So someone wants to know, I didn't know if they wanted to go into the nitty gritty of it because it can get to be very taxy, but someone wants to know what's the difference between an S Corp and a C Corp?
Yeah, the S corp and the C corp, they're taxed a little bit differently. So with the C corp, you have a flat tax rate on the C corp. So the profit of the C corp automatically gets hit with 21% of gets hit with a 21% tax rate. So that is with the C corp. The S corp, instead of getting taxed on the profit of the business, you get taxed on the salary that you pay yourself. So one of the requirements of an S corp is you have to pay yourself what's called a reasonable compensation. That gets taxed at about 15.3%, which is just the payroll tax. So when you're, let's say you're working a 9 to 5, you have to pay 7.65% in taxes. Employer 7.65% in payroll. So that's kind of the differences. And there's a few more tax benefits and things that you could do with a C corp, but not too many. Most individuals are probably better off choosing between a sole proprietorship and an S corp.
Got you, got you. I think this is my last one, unless the live has another question. So this is one that the internet gurus are always talking about, and I don't have a full handle on. And I think I saw you mention it, so I want you to elaborate on for me. This notion of hiring our children to work and hiring our children for as an entrepreneur
Mhm.
and the tax benefits of it. And specifically, my question is around my child is 4. We have a 4-year-old. And the way that it's often in little small blurps on social media when seeming professionals seem to be talking about it is like hire your kid regardless of the age of the kid, and you can write off, the salary that you're paying your kid. And I'm like, in my real estate life, I'm not sure, besides being the model for our marketing, what it is that my 4-year-old I can legitimately say is a salary for him. Can you talk a little bit both about how much of it, why people see why it's a benefit, how that works, and also under what circumstances is that like even realistic for us?
Yeah. So just taking a step back. So yeah, one of the benefits of being a business owner is you could pay your children through the business. You could pay them up to the standard deduction amount, which for a single individual is 12,550 for 2021. So as long as you pay your child under that 12,550 during the year, then you can be able to go ahead and take a deduction for your business, and then they won't be responsible for paying taxes. So it's kind of like a win-win for the both of you. Yeah, as
Real
far
quick
as
question. Are we
yes,
paying them on a W-2 or are we just literally just paying them?
a W-2. Yeah.
Okay.
You still want to, yeah, you want to give them a W-2. You want to put them on, you want to put them on payroll. You want to record and document the amount of hours they worked, what their rate is, and the description of their job. So that's going to be key. And they also need a separate bank account as well. So it can't just be coming from your bank account. You're just giving them Cash App or just giving them money because they're just like, yeah, right. You're just you're just cashing the
That's your
money.
money.
Yeah, that's your money. Yes, yeah. So they like to see that separation, and then yeah, it's a sexy topic. So yeah, they're gonna keep saying that they're just gonna put it out there without really talking about the age limits. The thing about it is the IRS does keep it open. They don't restrict the age. They don't have like an age minimum. But I think I like your thought process, and which is aligned with what the way I see it is. Yeah, a 4-year-old is not really going to be able to do much outside of maybe be in your photos. So conservatively speaking, I recommend doing or starting paying your children when they're 7 years old or older. The reason why I go with 7 is because there's a court case where they were able to pay a 7-year-old without, and they were able to win the case. So I'd say 7 years old or older. And then even with the 7-year-old, you wouldn't pay them the whole 12,500. You would probably pay a 7-year-old maybe $1,000 per month max. And then, as they get older and once they take on more responsibility and they have a more high valued skill, then you can go ahead and pay them more money. But they do need to be 17 years old or younger in order to be able to qualify for that.
Okay. So it is a thing, but there's more to it than simply, hey, I'm gonna pay Malcolm to, I don't even know what. I don't even know what he will do besides stand in
Yeah.
my photos.
Some of the easy jobs I talk about is like taking out trash, maybe packaging, maybe if you're shipping anything, maybe helping with packaging,
I think people
maybe.
heard that Blue Ivy got producer creds at birth and are like, bet I'm
Yeah.
doing that.
But
That
yeah,
is what I'm going to do.
Blue Ivy is it was born a celebrity. So yeah, it's different.
It's a
You could totally
different.
justify that.
Well, I want to thank you. I really want to thank you. I have pages of notes, and I hope other people do too. And this is something that we're going to actually archive in our Avanse Ansanm Facebook, so other people can actually come back and actually visit this and glean for some of this information. Share with our people, where can we find you? And give me a sec to get back into the live because I want to share. I want to put it in the chat, but share with our people where we can find you, where we can get some more of this great information.
Yeah, you can all connect with me on Instagram. That's where I'm the most active. So it's Michel Valbrun. So MichelValbrun. So first name, last name. You can find me on all social media platforms with that same name. So I'm on Facebook, Instagram, YouTube, trying to be more active on that, Twitter. So, pretty much, those are the main platforms you can find me on. And you could also connect with me at valbrungroup.com. That's my official business website page. I also have a personal page, michelvalbrun.com. But if you go on the Instagram page, if you click the link in my bio, I have a ton of great content on there. I have a course, Tax Wealth 101. That's kind of my introductory course to taxes. You're going to learn more. That's actually introductory to advanced. You're going to learn a ton of information on that. So that's on sale today. So if you guys go ahead and take advantage of that, whenever you get to it, hopefully it's on sale when you get to it, but definitely take advantage of that. You can pick that up at taxwealth101.com, and that's pretty much it.
Awesome, awesome. So, okay, great. Oh, one of our great board members has actually already tagged in your .com. So therefore, if you are, so do you work with, you're out of Georgia. So if we are out of California, we're in Florida right now, but people check us out from all over. There are Haitians everywhere, y'all. Haitians
Oh
are
yeah, indeed.
everywhere. So
Yeah.
therefore, for the Haitian community at large, are you available to us overall?
Yep. Yeah, all over the
All
country.
over the
So
country.
yeah. Yep.
All over the country, guys. So wherever you happen to be, if you're looking for a CPA and you are interested in working with someone and supporting someone from the diaspora, please definitely check out, go ahead and check Michel Valbrun out. And with that, I really want to thank you. Michelle, don't go away quite yet. I'm going to go ahead and stop the live and say thank you to everyone. Please remember, guys, that we are, Avanse Ansanm is, we have our membership that's open. Please click on our link in the Avanse Ansanm page. Check us out. If you want to participate in the programs that we are doing, if you want to lend your support to us, showing off great Haitian excellence, whether it's in the culinary arena, whether it's in the political arena, whether it's in the financial and wealth building. Wealth building is a thing that I am passionate about. We as a community continuing to pursue and continuing to share with one another how to grow in that. So if you are interested in joining us on the journey, please definitely check out Avanse Ansanm, send us a message, whether it's Messenger or otherwise, and we look forward to seeing you on our next event. Actually, this Thursday, I believe it's another live that we have. We're celebrating Black History Month, and we're doing a Black History trivia. So come back on Thursday evening. Look out for us being live again, and we will see you guys soon.
Bye guys. Thank you.